government of Ghana has extended the expiration date for the domestic debt exchange offer to the 30th of December 2022, initially scheduled for today, Monday, the 19th of December 2022. The Ministry of Finance said over the last 10 days, it had continued consultation efforts with stakeholders and regulators like the Bank of Ghana and others. And due to the festive season and other developments, that it decided to extend that date. Still in Ghana, Ghana has suspended debt payments on Eurobonds, commercial term loans, and most bilateral obligations pending an agreement with its foreign creditors. Quote, the emergency measures are necessary to prevent a further deterioration in the economic, financial, and social situation in Ghana, according to the Ministry of Finance in an emailed statement. And there it is on the screen Monday. Fred Duvor, Managing Director of Apakan Securities, joins us from Accra to discuss further. Fred, good afternoon to you. Thank you so much for joining us. Was it inevitable that there would be a temporary suspension of debt payments to allow dialogue with creditors?
Well, to be honest, I do not see a suspension of the payment on external debts coming. What I think was inevitable is the restructuring of Ghana's external debt as it has begun its domestic debt. It was actually our expectation that the conversations around the restructuring will happen with foreign creditors before any sort of payment suspension will be announced. But I guess the government is facing major challenges with respect to its debt repayments in 2023. So I believe something had to be done quickly before the end of this year and we move into 2023.
Okay. So on the other side of the coin, then, the assumption would have been that it would have been possible that debt payments could have continued, maybe if at a time set in the future, while these talks were going on.
Well, I mean, that is what one would expect, but we are not oblivious also to the challenges the government has with regards to its debt. Mind you, this year, the country has seen its dollar reserves deplete significantly since we lost access to the international capital market from October last year. And also, the central bank has had to support the cedi quite aggressively following its steep depreciation against the USD. So all of this has caused the government to lose quite a bit of its reserves. And I believe the government will consider that until it actually gets the 3 billion extended credit facility from the IMF, which in my estimation, it will be concluded in maybe April at the earliest. It will have to keep its wallets shut and have enough reserves to run the country.
Now, how do you think, I guess I should be asking about maybe not equity, well, maybe equities, but more euro bonds, I guess. How do you think that the markets will be reacting to the news to suspend those debt payments?
Well, I think the market had priced in this technical default to a large extent. Over the past maybe 2 months, the Ghanaian Eurobond curve has been trading at around an average of 35 cents to the dollar, which is junk status anyway. So I think investors had already priced a certain level of default into Ghana Eurobonds already. And following this news, prices have started dropping further, currently around 30 cents to the dollar, which is not too different from where it was at the early hours of today. But the price decline, as we see now, has slowed down, and I guess investors have moved from a state of denial to acceptance.
Now, we had you last on the show when the news broke that they would be extending, or rather, they would be introducing, that was Ken Ofori-Atta, Minister of Finance, the debt exchange program. Now we heard they've extended this further. The extension, what do you make of it? Is there enough time? They said something about the festive period and consultations. Well, what do you make of the extension for the debt exchange program?
Well, following its announcement, there was a widespread resistance from major bondholders in the country, and it was clear that, to me, the deadline would be extended because it seemed as though the government made the announcement before it had in-depth consultation with major stakeholders. As of last week, there were reports that no institution had tendered in their old bonds for the new one. So we believe the deadline extension was inevitable. I'm not sure if it is enough time to get the buy-in of all bondholders, but it is definitely a good thing for institutions that are going to tender in their bonds, as it allows them more time to complete the processes.
Okay, so I guess from your perspective, then creditors are on board with this exchange program. I mean, I guess at this point.
Well, I mean, of the major domestic bondholders, which are the banks, the insurance companies, pension funds, Bank of Ghana, etc., we have only heard explicitly from the corporate pension trustees and labor unions on their rejection of the program, with the hint that it would significantly affect the value of pensions. Other major stakeholders like the banks and insurance companies have rather been mute on their position, and it is a view that creditors are generally not very happy with the structure of the program. And the Ghana Securities Industry Association was clear on this when it stated that it rejected the program in its current form, and hence the consultation that the Finance Ministry is having with these stakeholders. So the question, however, is if creditors reject this program, what is the alternative solution? Because it is quite clear that the government has to do something about its debt. So I believe that ultimately you would have majority of the institutional bondholders come on board.
All right, I want to shift a little to inflation, but I think I'll tie this back to the domestic debt market. 50.3% year on year in November. Fred, we've talked so much about inflation when it was, I think, before 30%, right? And now we're at 50. What is this going to continue to climb? Is there a peak? What's your take?
Well, I mean, we've really been struggling with inflation this year, and I mean the reasons are quite obvious. We're a very heavy import dependent economy. So any pressure on the local currency translates into consumer price increases. And this year, we all know what has happened to the cedi within the first 11 months of this year. In November, for instance, the cedi saw an almost 40% depreciation against the dollar, and that contributed significantly to price increases in the market. So but I mean, fortunately, we've begun to see the significant appreciation of the cedi against the dollar, an almost 50% appreciation in the past 2 weeks. So this appreciation has resulted in almost 45% drop in fuel prices. Transport unions have announced a reduction in transport fares. Trader unions have announced that they're looking to reduce prices of goods and services by about 15%. So hopefully this trend continues, and eventually it will halt the inflation that we're experiencing now.
Okay, well, that's good to hear. But Fred, if it continues to rise and the Monetary Policy Committee continues to raise rates, I think the benchmark rate is 27% now. So doesn't that impact domestic debts for Ghana, i.e. investors demanding more and rates rising, making it more expensive to pay that debt back? Is that how it would work out?
I mean, hopefully inflation doesn't continue to rise. Ideally, that should be the case if the Monetary Policy Committee raises the rates. However, there's something interesting happening. We are seeing that due to the exclusion of Treasury bills from the domestic debt exchange program, the demand for Treasury bills have grown significantly, because now everybody is avoiding the purchase of bonds, mostly institutions. Because bonds are included in this program. So over the past 2 weeks, we've seen a significant demand for Treasury bills, as it is considered as a safe haven, and it will be exempt from the debt exchange program. So because of that, we've seen that there's a reversal in increases in the rate increase on Treasury bills. There's actually been a trend where Treasury bill rates are dropping. So if this continues, it's likely that Treasury bill rates would continue falling as against increasing in line with investors demanding more with respect to what inflation is happening. So the dynamics of demand and supply is playing out in the Treasuries market, and it is good for the government. It's making it means they're borrowing for at cheaper rates than expected.
Okay, great stuff. Only about a minute to go, Fred. Let me see if I can combine these two questions together. That $3 billion facility, you say it will close sometime next year with the IMF. One, is that money enough? Two, festive season. What is the average Ghanaian looking forward to for this festive season?
I mean, the $3 billion is not the panacea to all of Ghana's problems, to be honest. But I think in the short term, it will help in our balance of payments problem. In the medium to long term, however, the government should really be focused on growing its revenues and rationalizing its expenditure. With respect to the festive season, I think Santa Claus has come early for Ghanaians with the appreciation of the cedi. We're going to see prices decline. Petrol prices have gone down. So it's going to be a better December for Ghanaians than we've experienced throughout the year.
All right, well, maybe Nigerians will come holiday over in Ghana then, since things seem to be better there than over here. Fred Duvor, Managing Director of Apakan Securities, always a pleasure. Thank you for always keeping us updated with the latest from Ghana, Fred. Thank you.